Picture this, a company that everyone thought was done for. Its stock is crashing, employees are losing their jobs, and the media is predicting its collapse. It seems like a total disaster. Everyone's writing it off, calling it the end of the road. But then, out of nowhere, a billionaire steps in. They don't buy it to save it. They don't buy it because they want to fix it. Instead, they see something that no one else can, something buried beneath all the failure and negativity. They swoop in, buy it at rock-bottom prices, and just a few years later, this same company is thriving again, bigger and more profitable than ever. Why would a billionaire invest in something that everyone else believes is finished? The answer might surprise you. The real reason billionaires buy failing companies isn't about fixing them, it's about transforming them into something far more valuable than anyone ever thought possible. Let's uncover this mystery and dive into the strategy behind it. 1. The hidden value in failure. When a company starts to fail, it's easy to think that it's the end of the line. We all know the stories, mass layoffs, plummeting stock prices, and news reports predicting bankruptcy. Most people would turn away in fear, but billionaires, they see a golden opportunity. Take Apple in the early 2000s. The company was in crisis. Their products weren't selling, and the iPod, their once groundbreaking product, was starting to lose its appeal. The stock was spiraling downward, and everyone thought it was over. But Steve Jobs didn't see failure. He saw a hidden treasure in the company's technology and potential. Jobs didn't just come back to Apple to save it. He bought it back, redefined its vision, and transformed it into the tech giant we know today. He turned what was failing into an empire. This is the first thing billionaires understand that most people don't. Failure is not the end. It's just a stepping stone. Where others see a sinking ship, they see an undervalued asset that can be reimagined. The difference between failure and success often lies in perspective, and billionaires have a talent for seeing opportunities where no one else does. 2. Buying the pieces, not the whole puzzle. One of the secrets to billionaire success is understanding that buying a failing company doesn't mean buying everything about it. What they're really after are the pieces, the individual parts of the company that still have value. Let's talk about Virgin America. In 2016, the airline was struggling with financial losses and poor performance. On the surface, it seemed like a dying brand. Yet Richard Branson didn't buy it for the airline's poor flight services or the falling stock. He bought it because of the strategic assets it held. These assets included airport slots, a loyal customer base, and access to a market where Virgin could expand. By acquiring Virgin America, Branson didn't just purchase an airline, he purchased a market position. These assets were invaluable, and even though the company itself was in trouble, the pieces were worth far more than the whole. This is how billionaires think. They break down companies into smaller, valuable components and buy the parts that have real potential. By doing this, they get much more than they pay for, often without taking on all the risks that others would assume. 3. The comeback, the billionaire's secret weapon. So why would a billionaire buy a company that's barely holding on? Because often, the real value isn't in the company as it is. It's in the vision they can bring to it. When Elon Musk acquired SolarCity in 2016, the solar company was struggling with debt and declining business. At first glance, it seemed like another failed venture. But Musk didn't buy it just to save the company. Instead, he had a grander plan. He was focused on integrating SolarCity into his larger vision for sustainable energy. Musk's purchase wasn't about maintaining the status quo. It was about turning the company into a cornerstone of his broader vision for the future. With his leadership, SolarCity didn't just survive, it became a key player in revolutionizing the way we think about energy. This is a hallmark of billionaire strategy. They don't just buy companies to maintain them. They buy them to transform them. They have the vision, the ideas, and the resources to completely revamp a company, often leading to a much more successful future than anyone expected. 4. The financial engineering behind the deal. When billionaires buy failing companies, it's not just about throwing money at the problem. They use sophisticated strategies, often called financial engineering, to turn struggling companies around. Take the case of Blackstone and Hilton Hotels. In 2008, when the financial crisis hit, the hospitality industry was hit hard and Hilton's stock was plummeting. It seemed like a terrible time to invest, but Blackstone saw things differently. They didn't just buy Hilton, they restructured the company's debt, streamlined operations, and found ways to capitalize on changes in consumer behavior. By the time they were finished, Hilton was more profitable than ever before. Blackstone made billions from a company that, at the time of purchase, seemed like a bad bet. This is what billionaires do best. They buy distressed companies, not just to save them, but to completely restructure them. They use their financial expertise to make these companies profitable again, and then sell them for a huge profit. This financial engineering gives them a distinct advantage when buying failing companies. The billionaire mindset. One thing that separates billionaires from everyone else is their mindset. They don't fear failure. They embrace it. They're not looking for guaranteed success. They're looking for opportunities to turn problems into profits. Take Warren Buffett, for example. When Buffett bought Berkshire Hathaway, the company was in deep trouble. Its textile mills were losing money, and it seemed like an odd choice for investment. But Buffett didn't see failure. He saw an opportunity to build something larger. Buffett's mindset is clear. Even when a company is struggling, it can still be turned into something greater. His willingness to take risks, invest in undervalued assets, and hold on to his vision has made him one of the wealthiest individuals in the world. Billionaires have an unshakable belief that they can turn failure into success. They're not afraid of risks, they thrive on them. This mindset is what drives them to buy companies that everyone else would avoid and turn them into profit-generating machines. The secret of distressed assets. The final reason billionaires buy failing companies is simple. They're experts at capitalizing on distressed assets. When a company is on the brink of collapse, its assets, whether it's real estate, intellectual property, or brand equity, can often be bought for a fraction of their true value. Take Apollo Global Management's acquisition of Hostess Brands in 2013. At the time, Hostess was bankrupt, and its famous Twinkie was considered a joke. But Apollo saw the value in Hostess's brand. The Twinkie wasn't just a snack, it was part of American culture. By purchasing the company's assets, Apollo didn't just try to save Hostess, they rebranded it, streamlined operations, and launched it into the modern market. Today, Hostess is thriving again, and Apollo made a huge profit by capitalizing on its undervalued assets. Billionaires know that a company's brand, real estate, patents, and other assets are often worth much more than the company's failing operations. They buy these distressed assets at a deep discount, then use their resources and knowledge to bring them back to life. Billionaires see what others don't. The real reason billionaires buy failing companies isn't to save them, it's to transform them. They look at a company that everyone else has written off and see a hidden gem. They break down the company into its valuable parts, buy it at a fraction of its true worth, and turn it into something far more profitable than it ever was before. So the next time you hear about a billionaire purchasing a failing company, remember this: they're not just buying a company, they're buying potential. They see what others miss. They understand that failure can often be the key to success. If you want to learn more about how billionaires build their fortunes and how you can apply their strategies to your own life, don't forget to subscribe. There's always more to learn about the strategies that drive success.